Hi, welcome back to my channel. I'm Cassie Villela and I'm a realtor, property manager, and investor here in San Antonio, Texas. On this channel, we talk about all things real estate, from market updates and data to home and garden stuff. So if that's your cup of tea, make sure you like, follow, subscribe, etc. I'm on pretty much every social media app, so under my name, Cassie Villela, so you can follow me there as well. I put the same videos kind of on all of the different apps, so whichever one you like the best, go follow me there. Moving on, today we're doing our October 2021 market update for the San Antonio area. We're going to start out like we always do with COVID updates. I'm very excited to report that we are improving. We are now at mild cases, so out of low, mild, moderate, severe, critical, we're at mild. So that's fantastic. We're down to 71 patients on ventilators, and that was in the hundreds just a few weeks ago. So I'm very excited. I hope that that is good news. I hope that we continue to follow that trend. So if you look at this chart, you'll see that the single family home showings per week are still basically following the trend line from last year. We still have basically the amount of showings that we would expect to have this time of year. Definitely on the downward trajectory like we would expect between summer and winter. Fall is kind of that time where we're slowly decreasing, not by a ton. San Antonio doesn't ever just completely stop. But yeah, obviously during the holiday season, we have fewer showings, and that's what you can see here. And also keep in mind that this chart is specifically showings between 125 and 225,000. Just an update that last year, 2020, I used 100 to 200,000 because in my mind that is the sort of starter home, rental home price range. And then to kind of make the maps fair the charts fair, we have seen such appreciation since last year that I think the same range wouldn't really capture the true picture. So I changed the range to 125 to 225 as of 2021, just to kind of keep up because we have seen double-digit appreciation and prices have risen that much. So I wanted to make sure that the graphs were giving us an accurate representation. Rental showings didn't have to do any of that. Rental showings don't really change according to price. This is all price range of rentals. And you can see that we're basically on track with where we were last year. A little bit lower this past week than where we would expect to be, but nothing to worry about. It tends to kind of rebound. Weekly home sales are exactly where we were this time last year. You can definitely see, I think it's really fascinating how you can see the peaks and valleys and it just lines up so perfectly. It's interesting to me how the cycles go and how we can kind of predict what's going to happen. So if we're looking ahead into November, we would predict that, we're going to have a little bit fewer sales in November than, earlier in the summer, but still a good amount. It doesn't dip down. You'll see that spike down in February of 2020. And just keep in mind that that was the freeze and nobody could go anywhere. So that's why all of the closings got pushed and it was a whole, mess. And so that's why that spike is there, or that valley is there. But otherwise, we're just right on track. Moving on to the median price, you can see that number, it just keeps climbing. Even though there are some indicators that the market is slowing down a bit, and we have, days on market increasing, and we have some other factors that show that maybe we're kind of mellowing out a little bit, it seems like the prices are still increasing. I was really surprised, honestly, to see this past week, just that last spike there. I think it was 322,000 was the median home price of the first week of October, which is just, again, bonkers to me. And you can see the difference between this year and last year and just how much this market has really climbed. So moving on, so median sales price, you can see here where it's kind of leveling out. The last couple months have been pretty stable. I think it's interesting because this chart is from from Showing Time reports. And the other chart was from the Board of Realtors, kind of just reporting on their sales that they're seeing. And so you can kind of see that they don't exactly align, which is interesting to me. And I need to find out why. I need to find out where they're getting their data from. I don't know if it's possibly this data is coming from the entire MLS, and perhaps that includes all of the outlying areas around San Antonio, like Seguin and South Texas. So it's possible that maybe this one is affected by those metrics. And the Sabre one is just San Antonio, so it's a little bit higher. I will do some research and find out why they don't agree, because that is, it's starting to be more of a difference. So I think that's important to find out. But anyway, all of that to say, you can definitely see how over the past few months the chart's just been going skyrocketing, and now it's leveling out a little bit. New listings are down, which is kind of to be expected. We're going into the holiday season. People aren't as excited to sell their home, like with Thanksgiving coming up, things like that. So we do have new listings down. I think that that's pretty typical for this time of year, though. I don't think that that's anything to be concerned about. Now, the number of homes for sale is an indicator that I think we need to pay attention to, because as you can see here, the number of homes for sale on the market was plummeting. And the reason it was plummeting wasn't because there were fewer homes being sold. It was just because the homes were being sold so quickly that there wasn't any inventory, right? There weren't a lot of homes on the market. And so what this indicates to me is that is slowing down. We have homes sitting for just a little bit longer on the market. And so our inventory is increasing just a little bit. And I want to pair this chart, the homes for sale chart, with pending sales and closed sales. So you can see on the pending sales that really has dropped. That dropped in September. That really fits with, like, just anecdotally in the market, what we've been feeling. It does feel like there are homes are taking a little bit longer to get under contract. Buyers are being slightly more choosy than they were before. And so this definitely follows that trend that we're seeing. But again, nothing is dramatic here. It's gone down slightly. There are slightly fewer pending sales, but still, it's still in a good range. You know what I mean? It's just that we were so crazy in the summertime that this looks like it's slower. Same thing with closed sales. We have fewer closed sales for 2 months in a row now. It's gone down a bit. And so the reason that I put these charts on here is because I want to compare the number of homes that are available on the market with the closed sales and pending sales. Because if we have fewer homes on the market and high pending and closed sales, that shows me that there are lots of homes being listed. They're just getting sold really quickly, and it's all moving very quickly. And so this is kind of showing me that the homes for sale is increasing, the closed sales is decreasing. That's kind of showing me that it's just starting to kind of slow down just a little bit. Median days on market further iterates that point. And again, you can see here, it's still extremely low. We're still down under 30 days on market, which is exceptional. You can see that a year ago, we were up around 60 days on market. So we're still selling homes in half the time as this time last year, and remembering that this time last year, we were like, oh my gosh, this market is so crazy and so hot. So, just keep in mind, yes, the charts are starting to shift, but they're still incredibly, 30 days on market is still incredibly low number. And then price per square foot, as you would expect, is climbing because we see the median price climbing. So overall, the prices are climbing, but you can see that in that kind of mid-range, so like the 165 to 325, so that's going to be most of the homes in San Antonio. Those are sort of leveling out. So you can see that for 2 months straight here, those have kind of stayed level. And so that tells me that if you've got a home in that price range, especially, but even, the luxury homes are still going up, but it looks like that median price range where most of San Antonio is kind of leveling out. So you want to use this information if you are going to list your house soon. You know, you want to look at current prices and price accordingly. Whereas a few months ago, what we were doing is, you know, you got to look at current sales and then add a little bit because the market is moving so quickly up that you've got to keep up with it, right? But now you can look at your comps from the past couple of months, and that's where your price should be if you want to get your home sold quickly. And then this chart, median percent of last list price, excuse me, that's hard to say. But you can see how, you know, we had over the summer, we went actually above 100% for most of the price ranges, which was bonkers to me. Like, I even was kind of wondering if this chart could go above 100% because for so long it was kind of stuck at 100%, and then it did spike up to like 101.5% of list price. And so what that indicates is that people were buying at above list price, which we all know, right? If you've been a buyer or seller in the San Antonio area, you know that you were having to go above list price to get anything under contract. So that's what that's showing. But you can see now we're starting to go back down again. Now, again, back down again is we're going back down to 100% of list price. So you're not going to get a deal. You're not going to come in and like offer under list price on a perfectly good home and get it. But you know, in most cases, I shouldn't make definitive statements, but you know, in most cases, you're still going to need to go at list price to have your offer considered as a buyer if the house is ready to go, if there are no issues or anything like that. Month supply, so this kind of goes with what I was saying earlier. We have that huge decrease over the spring and summer, all of COVID, you know, it was just getting hotter and hotter and hotter and hotter. And then now we see over the last couple of months, it's kind of starting to creep back up. That's a combination of a lot of factors. Builders are building more. You know, they had really underbuilt for the last decade, so they really are starting to build more homes. We have now the last couple months are that just kind of a slowing down. There's a few more homes on the market because they're not going under contract instantly like they were a couple of months ago. You know, it's taking like a couple of weeks. So that's what that chart is showing us. But I want to reiterate, you know, 6 months is considered a balanced market. Like it's not sellers or buyers market, it's balanced. So we're still in most price ranges under 2 months of inventory. So, you know, keep that in mind. It's still a seller's market. It's still bonkers. It's just that compared to a few months ago, it's starting to cool off a little bit. Now, these charts with the circles are from the San Antonio Board of Realtors. You can go on their website. You don't have to be a realtor. Go to market statistics. What I do is I just Google San Antonio Board of Realtors market statistics, and that'll bring you to the page that has all kinds of data. It actually comes from the Texas A&M Real Estate Center that studies this. And so they have just all the numbers. If you're interested in, like, I never include data about condos and townhomes, for example. So if you were interested in buying one of those, you could go to that page and see all of the information on those and how they're doing right now. So just keep in mind, if you're looking at something that I'm not covering, it's probably there. So that's a really good resource. We are basically exactly where we were this time last year, is all this number says. SFH is single family home, by the way. Single family home prices. So it's kind of cool because this time the average and median are like pretty much match up, not the price level, but the amount of increase. So I think that's kind of interesting. But you can see how the difference here between the median and the average, you know, the average is about $50,000 higher than the median. And that's just because those luxury homes that are multi-million-dollar homes really skew the average. So I like to look at the median more. I think that's a better measure. And so that's what I use, like on most of my charts earlier. I always use the median because I think it's a more accurate measure. But you can see here how the median price this time last year was $258,000, and now it's basically $297,000. So we're getting close to that $300,000 mark. So that's a just phenomenal increase since this time last year. Days on market, we talked about this earlier, but we're down to 27. Now that's up from last month. Last month was 24, so we've gone up a little bit. But comparing it to this time last year, we were at 53 days on market. So, you know, just keeping in mind, it's still a wild, wild market. Multifamily sales, you know, basically around the same place we were last year. And then prices, it looks like there's an increase. You know, just always keep in mind with multifamily that could be skewed by, you know, maybe this month more fourplexes were sold than duplexes. So it can be skewed a little bit, but it does look like there's a little bit of an increase. And that probably has to do with the next slide here, which is residential rental. And so you can see that the rent price has increased about 11% since last year. And so the average rental price right now in San Antonio is $1,714. Now, keep in mind that this only takes rentals from the MLS. There is a separate database for apartment rentals. So this is not including apartments. This is single family homes and then maybe a handful of like condos or other types of property that are rented out on the MLS. But for the most part, the majority is single family homes. So if you want to rent a home in San Antonio at this point in time, 1,714 is kind of your expectation. That's your average, which to me sounds like so much. Like I was shocked at 1,500 last year at this point. So to me, 1,700 is just for the, I'm sorry, I'm on my soapbox, but just for the average income of San Antonio, this rent is really high. And I am really curious to see, like it just keeps climbing. I know that's good for investors, but I'm curious to see how that's going to affect San Antonians and how we're going to be able to provide some affordable housing because it's kind of running away from the wages. I think that's definitely a problem that some smarter minds than me need to work on. So you can see also on the units rented, there's a slight decrease, but I wouldn't worry about that. This is the second month in a row that there has been a decrease in the number of units rented, but it's single digits, so I'm not super concerned. If it continues to decrease, then maybe I will look into like, is this connected to what I just said about how people can't afford the rent anymore? Is that playing into it? COVID might be playing into it. There's so many factors. So if I see that continuing to decrease month after month, I probably will look into it and see why that is happening. So I hope that was all helpful. Basically, the summary is, yes, we're cooler than we were a couple of months ago. Not just the weather, the market also, but we are still incredibly wild compared to like a normal San Antonio market. The appreciation is through the roof. This is definitely still like a very new thing for San Antonio. If you are a buyer, just be ready, be competitive, be as competitive as you possibly can. Maybe wait until you can save more money so that you can like ask for less concessions, things like that. If you are a seller though, I would keep in mind that like, hey, we're probably at the top of where we're gonna be. Just all the indicators seem to say that we're kind of like plateauing. And so if you're a seller, you know, I would not go into it thinking like, oh, I'm gonna price my house like way high and get a bunch of offers. Like that would, you know, we're not in June anymore. Like that's not happening anymore. So you do still need to be realistic. If you're a seller, you're still probably going to get 100% of list price and a pretty good offer if your home is ready to go. But you know, you can't be unrealistic. You can't just price it higher than the comps suggest. It's not going to work. It's not going to go under contract. So just keep that in mind. I hope this was helpful. If you have any other questions, then please leave them in the comments. If you have any other sources of data that you like, anything like that, if you think I said something wrong and you want to argue with me, please do it in the comments. I love to argue. So I will see you guys later and have a good day.